Good afternoon, traders. Welcome to this week edition of Market Outlook. We shall quickly look at some pairs and our expectation against next week trading. But first and foremost, we have to check fundamental to see what we'll be expecting next week. Forexfactory.com. See, we have a lot of fundamental news coming up next week, so we have to be wary of all of them. Calendar, right? Calendar, September. This is next week. Starting from have to look at some of the starting from 12th. Yes, Monday on the 12th. You have a GDP report for Great Britain pounds on Monday. All right, we have to take note of this. It's very important on Monday early in the morning. Then on Tuesday, you also note that there's going to be bank holiday. Okay, this country don't trade it, right? On Tuesday, there is nothing except we have CPI. CPI, we have to be very careful. CPI is a measure of inflation of any country. So CPI report is usually very volatile right now because there's inflation everywhere. So then we have the core CPI report. If you look at it from 0 to minus 0.1, so it's dropping, inflation is dropping. So if inflation drop, that might help DXY to go down a little. Okay, you have a GBP report again, CPI on Wednesday. All right, early in the morning, you have to be very careful about this. Then you have CPI for USD again next week Wednesday. This particular news, guys, is usually very volatile. Okay, you have to pay attention to it. I was in profit 1 month like that, 3-4 months ago, 10K. I did not, I checked, to see that we had the CPI report on a Wednesday like that. I had break even in all the trades, I repeat, all the trades. At the end of that day, I went home with just $300 to $400 from 10,000 profit. So you have to be careful so that when these news are going to be released, you don't know the direction it will go. If you are in profit, you close your trade. Okay. If your profit is not much, you break even and protect your capital. You have NZD again coming, GDP report coming on Wednesday. We have to take note. This week is certainly going to be very volatile. Then you also have on Thursday, you have employment change for AUD, okay, and unemployment rate. Okay, we're expecting a higher number. That is the 35,000 from minus 40,000 that lost job previous month. We're expecting positive employment change. All right, and we're expecting unemployment rate to remain the same. Just take note of that. If you don't know how to read these figures and you want to know more about fundamentals and macroeconomics, you can contact me for that, although not free of charge. Okay, as a moderate charge, I will teach you how to analyze the macroeconomics as far as all this is concerned and how they affect your currencies. Then on Thursday, you have USD news again. Core retail says, Empire says manufacturing index, and then retail says. There is also a very good news to watch out for. All right, that's on Thursday. Watch out for them. And then on Friday, you are also going to have a USD news premium consumer sentiment. All right, consumer sentiment. So take note of all these guys, take note of them. It's very, very important. So I usually don't trade news, as you may know by now, but what I do is I allow the news to go and see the structure that it has created and trade and react based on what has happened in the news. So that's what I do. So let's go and start our analysis from DXY. Of course, you know, I kept saying last week that we want DXY, you know, to retrace a little, and then you can see weekly time frame, it went up and came down. Okay, on the daily time frame, you see it's beginning to move downward. Okay, if you look at it on 4 hours time frame, I have this trend line in place. All right, I have this demand level on I think on the daily time frame. Yes, on the daily time frame, I have this demand level in place. Okay, so on this 4 hours time frame, you see that gradually it's developing an ending structure here. You can see the way it slowed down. It's not going up the way it used to move here. You cannot compare this move here. Can't compare this move here to the move that you have here. You can see this one was moving fast, this one was moving slowly. So if you check divergence for this area, you will see that the divergence is what? Down. There's divergence. Okay. So based on that, guys, all I have to do is to identify my supply. Supply at this level, you can see this candle went off and before you have this one break down to break structure. So this is my supply level. So I want DXY to come to this level, okay, before we sell. And when we are selling DXY at this level, you know what happened to GBP, USD, Euro USD, and AUD USD. Okay, but right now the correction is developing right at this level. So we want this correction to go up to this level before we look for sell on DXY. Okay, AUD USD. If you look at it, the kind of ending structure that developed on DXY to the upside, the same also developed for AUD USD to the downside. You see it, and if you check this ending structure, you will see that there is divergence. Okay, there is divergence. Can we check right from here? The divergence is not strong, so we have to be very careful. There's no divergence at all. We have to be very careful. That means I was looking for buy opportunity to the upside before, but now I have to be very careful because the divergence is not strong. The momentum is still to the downside. So what is going to happen? I was projecting this pair to come back to this demand level here. Okay, and from here, I will expect a reaction. Hear me right. You expect a reaction. If this reaction does not come to break internal structure, then you have no trade. What do I mean by internal structure? For instance, if you have a move that is coming down this way, okay, and it's slowing down, but you now have one that push and break this internal structure. This is what we call internal structure. So correction of that one to give a discount, you have a move to the upside. This is how I will project it. So you allow this to correct, come back to the demand level. Then at demand level, what confirms that this is a demand, a true demand level, is a push to the upside from that level to break internal structure. That will confirm that you are on your way back to the upside to catch this level. Okay, this is the supply level that we mark on a higher time frame. From here, you can be looking for a trade to the downside. Euro dollar, guys. Euro dollar, guys, can see the flow of euro dollar is gradually to the downside. Okay, even the blind will see that you have a lower low, a lower high, a lower low, a lower high, a lower low, a lower high, a lower low. We are expecting a lower high for us to take a move to the downside. Okay, that's what we're expecting for euro dollar. But then on daily time frame, we have a supply level right here. We have one supply level at this point, but I would like to pick this particular supply level because the reason is simple. If you take the fib of this impulse to the downside, this one seems to correspond with 61.8. Okay, 61.8. All right, so Based on that, guys, I would love to see euro dollar coming to this level. And moreover, on this time frame, you see that we're having equal high at this level. So going to 4 hours time frame, this pair cannot proceed to the downside like this, except this level is taken. Okay, this level must be taken. So based on that, I have identified this trade is gone. It has hit TP. Okay, it has hit TP. Right. So now, right here, you have a demand level that is created right here. This one, this one. Okay, you have a demand level right here. So I want this price to come in as much as I want to break this top, because there are pool of liquidity, okay, at this top here. So in as much as I want to break this top, then I must look for a comfortable demand level where the market will push to the upside. And if you check it on lower time frame, you will see that right here, it has made an impulse. That's made an impulse. Now it's correcting. So we want this to come down. We don't know how it will come down, but it should come down to this, our demand level. Okay, and after we should see a reaction to the upside, then correction you get it. Okay, that's how you do it. You target this supply level. That's euro dollar. Okay, you can see that the whole of this place, the whole of this region, is a region of consolidation. Okay, and when you have consolidation like this, since you are expecting a downside, you definitely expect the pair to break off from consolidation level to catch liquidity as supply. Okay, and then from there make a move to the downside. Okay, so if this supply did not hold, if you do not see a reaction at this supply, guys, it then means that the market will take order from this supply, and then from there make a move to the downside. Okay, so take note of this. And since we have a lot of news coming on this week, some of the news will help you to push, or will help us to push this market to the desired supply level. GJ guys. Okay, weekly time frame. See, forecasted this one that is going to make a move to the upside, and right now the move to the upside is there, and then the move is not complete yet. It has to make some correction and then come back, you know, and go back to the upside. You can see this powerful weekly candle, guys. It's a very powerful weekly candle. Okay, go to daily. Okay, go to daily. Right here, you see consolidation right at support. Anytime you see consolidation right at support, it's almost 90% guarantee that it's going to break out to the upside. Okay, because this consolidation right here that look like a triangle is order accumulation. It's just accumulating order for a move to the upside. So and anytime you have an order accumulated this way, okay, if the market break to the upside and come down immediately, that is a sign that it has grabbed enough liquidity here to push down. So all you have to wait for is a corrective structure to sell. Okay, but in this scenario right now, if the market consolidates as it's doing right now, it break up to the upside and is correcting to the downside. This is nothing but a break of market structure. It's a break of market structure. Expect this to make a move to the upside. This is two different structure and pattern that you must master in the market. Okay, so now let's look at what is happening right here. We expect on daily time frame, of course, if you look at daily time frame, you can see this trend line. This is a trend line. Many people will be trading this as resistance. Many people will say this is resistance. This is resistance. Many people will be selling here and say this is resistance. Can you see? Market, boom, broke it. And then many people will be selling here that, yeah, the market is now at equal level with this one. All right. Many people will say this is resistance. and the market will not sell from this equal high, guys. So expect a correction and more upside before you can see any sell. Okay, expect a correction. If you take a fib of this impulse, guys, this impulse, you see around this level, there's a hidden demand zone right here. I expect this market to come to this level, and then from here, guys, I want this to happen. Break of internal structure, go for more upside. Okay, until we break this top, most likely we'll come to this level. This level here, come to this level. Most likely we'll come to this level. Okay, this is trend line liquidity, guys. All this money lying on top of this trend line, it will shoot it. Okay, after everything is swept, okay, the market will now make a move to the downside. Take note of that, guys. So your first consideration for trade on GG will be a thorough correction back to this level, a reaction at this demand level, and then when trend development begins, you make a move to the upside. That's GJ. Same thing, GCAD, guys, bearish. So right now, you see here, you have a trend line here. Okay, you have a trend line here, you have a trend line here. Liquidity reside both at the lower side of the trend line, right here, and then at the upper side of the trend line. So right here is a supply level. You see this engulfing candlestick pattern here. Okay, that's a thorough supply that broke market structure. This market structure is taken by this supply. So you want this pair to gravitate toward this level. Once you get to this level, if this is a true supply, you should see a reaction by way of import. Then go for the correction, and this is your trade to the downside, guys. Don't joke with this. This will be your trade to the downside. Here, your trade to the downside. You know, along in the course of trading week, we're trying to grab this upside move because I knew that GBP card is going to come to around 1.53. So I was trying to grab a sell, a buy from this level, but it was not going as expected. It was flashing up and down. So we couldn't, we had a break even, and some people had just like 20 or 33 pips profits, you know, but we're going to wait to see this move come to this level. And from here, we look for reaction, trend development, and take a trade to the downside. That is a G card. Yeah. GBP USD, guys. GBP USD. Okay. This is right my supply zone. Okay. And here, I need inducement of this pair to the upside. I need inducement to the upside. And here is my little demand level. So I want correction to this area. So at this level, I want a reaction. Okay, then a correction. Then I take the trade to the upside. If you are not interested in taking the counter trend trade, there is it's not a sin for you to wait. Let this market get to this supply zone. Then you wait to see reaction at that level. Okay, reaction. It's very, very important. You have to wait to see reaction. Just like here. Okay, see this consolidation right here. The market, you know, reacts to the upside. You see, flows down immediately. I told you, you now look for correction, and this is your trade. Okay, the same thing is applicable. You can wait, let this market hit the supply zone and react from that level. Okay, when it will react, you are going to see small impulse in 15 minutes time frame, just like this. This is a reaction now. Can you see? 15 minutes impulse that break the structure. You look for corrective structure and sell. That's the kind of reaction I'm saying you should wait for when the market get to your level, either demand or supply level. So when the impulse happens, you wait for corrective structure and sell. Okay, so that's it for GBP USD. Now for this particular pair, GBP AUD. Okay, right now we are still bearish. There is no buy pressure right now. Okay, but of course we are expecting a buy opportunity for this particular pair, because right here we have marked here as liquidity level, and truly the market has grabbed that liquidity. It made a move to the upside. We expected correction, it kept coming downside. So what I want us to wait for is that right here, right now, box displays this consolidation happening right here. If this market come out of this consolidation and move to the upside here, then you know that it has nowhere to go. We have to pick this demand zone, and right here we look for reaction in lower time frame, guys. Look for reaction lower time frame in the form of 15 minutes impulse. Okay, let's assume that it comes up to that supply zone by making a trend right here. We want a reaction here, correction, we sell. Okay, and this sell here, this buy here has taken liquidity here, and then this sell here is coming to also take out all the liquidity that reside at the low. It's possible that after this market forcefully break to the downside, it immediately reverse up. If it immediately reverse up, it means that coming to this area is a grab of liquidity. Okay, if it goes up immediately, then we look for corrective structure back to the demand level. Sorry. If it goes up immediately, then we look for corrective structure, and then we make a move to the upside. But if after coming to this level, it does not immediately move up, rather is correcting at this level, you know that it did not grab any buy liquidity here. So it's just correcting this move to the downside. You allow the market to retrace back to supply, and then for another downside. It means that this market will not make any other move to the upside again as anticipated. You know, we want this trend line to be taken to the upside before we sell. But right now, if it's developing this kind of pattern, it means that breaking this level will no longer happen. All right. This one is clearer. Okay. This particular pair is clearer than GBP AUD. Okay, because right now you have a 3 waves down, okay, a 3 waves up, and a 3 waves down. This is a WXY structure, and this is the kind of reaction I was telling you the other time. If you have a pool of liquidity right here, and the market broke down, you know, and take order from demand. Where's demand, guys? Take order from demand and immediately react, okay, to the upside very fast, fast down, fast up. In that case, this has become a bullish structure. You are just going to wait for, you know, correction to the right fib level. In this case, I'm expecting it to correct to this level because I have my demand level here that break this structure, okay. This move break this structure. I have my demand level here. So this market gravitate towards that level. I want to see a very fantastic reaction. Okay, you know, we bought at this level, but I said we should close. GBP NZD because it's still going to make a move to the downside. And where is the move, guys? All right, let the move has already started. Okay, the move has already started. Let this move break down to this level. And then from here, we want to see a reaction that break internal market structure. The correction of it will make, will buy this pair right here to the upside. Okay, then UJ. All right, UJ is still bearish, but we want some correction on UJ. Want some correction right here. We expect it to either come correct down to this up to this side or this side. Why this side, guys? Because right here you have some trend line here, you have some liquidity. You take this order by coming to this point. From here comes down, or alternatively you can also remain at this level. Okay, wait for it and see reaction at this level. You know what's very important in confirming your demand or supply level is reaction that you get from the market. If the market gets to this level, let's say it gets to this level, and it keep going up, then you don't need a Swiss here to tell you that this is not the right supply level you're supposed to wait for. Then you wait for this level, to clear all this liquidity right here and come over here. So when it comes over here, you watch the reaction at this level. If the reaction come straight down, you see the impulse, good. It means that this is the right supply. Now look for corrective structure and you sell. But if that reaction does not come and keep going up, then you have no sell trade. It's as simple as that. So we should learn to wait for reaction. But in this scenario for USD JPY, what will interest me most is to see reaction happen right here, then corrective structure, I take it down to this level. This is my demand level, okay? And in that case, this will just be a 3-wave corrective structure. 3 waves down, 3 waves up, 3 waves down, WXY. Then we resume upside from here, resume upside from here. Is that okay now? So that's my projection for USD JPY. USD card, guys. I gave you this in the group that right here, we have a trend line liquidity here, that this market will not move to the upside until it grab this liquidity. And you can see it from here. It has grabbed the liquidity. I can show you from the community analyst. I'll show you from this this quickly. Okay, I'll show you this. You can see. Okay, you can see that particular structure. You can see it here. You can see the trade right here. Show you that here you are going to have this liquidity taking, and it's going to take order from this demand level. Then from there, you have a move to the upside. That was exactly how I show you this structure, and you see the trade. The trade went on smoothly. Okay, so right now you can see where it is. Broke it, came to pick order from here. But right now, I'm not still convinced that the sell will not still come. Okay, because if the right buy order was picked from here, I expect that the rate at which this USD card will move to the upside should have been sharper than it was. Okay, but look at it. It just came very small, very little move from that demand level. So that tells me that I will have a correction and come to this supply level. So we should still be expecting a sell opportunity for a USD card next week, because this move out of the demand area is not as sharp as I anticipate. So in that case, we may still expect a move down from at this level, sell, a reaction here, correction, and sell. Okay, sell to break this level. We should target the next demand zone. Okay, this is the next demand zone, guys. This is the next demand zone. Okay, so expect the market to come here. Then from here, we see the reaction of this pair. Okay, if it keep going down, then we target the next one. If we keep going down, we target the next one. So who knows? Depending on the nature of fundamentals that comes out of USD this week. If DXY is deeply bearish, then this one will go down very well. Okay, so that's my joker for USD card. Then Euro JPY. Okay, Euro JPY is bullish, but right now I have to show you this structure, guys. Anytime you have a bullish market, and it get to a point and it's consolidating, you now flash up to break this top and then come down. I've told you severally, when you see this structure, this means that this market has come to grab liquidity here. Okay, and then the liquidity it grabbed was so heavy that it was able to push the market down. So since the order is sustained, all you have to wait for, guys, is a correction to the upside and a move down. Okay, this scenario is the same thing we're having here, guys. You're having in a bullish market, you're having a consolidation break up to the upside, and a sharp move down. All I'm expecting, guys, is a correction back to 50 to 61.8. I see reaction on 15 minutes time frame, correction, and a drop down. Okay, if not for anything, guys, we should be able to catch this move to the downside, here to here, here. Okay, for this particular structure, and this is my demand level. I expect a reaction at this level. The reaction in form of a reversal to the upside, or continuation to the upside, or reaction in form of a corrective structure will happen at this level for more downside. That is a Euro JPY, guys. Then gold. Okay, if you look at gold on a weekly time frame, you see that it's bearish, and I've said it time without number that this is a level that need to be taken. This is gold will never move to the upside except it break this level, because at this present price level, there is no way it will have caught enough liquidity to move to the upside. You need to break this level, guys. You need to break this level. Take the liquidity from this demand zone and then have a move to the upside. Is that okay now? So now it's developing a structure that will assist it to pick that liquidity we are anticipating. Okay, and how do we project it, guys? What we see is simple. All right, right here on this weekly time frame, you see that you have a supply area here. Okay, and ever since you have this bearish engulfing candlesticks, the market has not made any significant push to the downside. That's to tell you that it need to come back, and it came here and make equal low, and it did not break it. What does this equal low represent, guys? It represents liquidity. That's all. Represent liquidity, meaning the market is still coming to break this equal low. Then if you go to daily time frame, you see that we have a supply level. Right now, this supply level is more important to me, because if this supply level is more important, then why is it that I didn't break the structure? It didn't break the structure. This supply pushed harder than this. So I will not want to pick this one that is closer. I want to focus on this one that is higher. Okay, depending on where I see reaction anyway, because reaction is very important to me. So let's just put it there. When we come to 4 hours time frame, you see what the pair is doing based on wave analysis. If you look at this structure as a flat, okay, for a move to the downside, it means that you are looking at it taking a correction of this particular wave. So that's why we must be careful, because I don't think we can come back here on Monday and see that the market will have enough volume to keep pushing gold to the downside. So what I favor is another move to the upside. If you have a 3-wave structure here, you should have another 3-wave structure here, and you have this wave move to the upside. Either to grab liquidity at this zone or at this zone. Any of the zone will be cool. It will also be at this zone. You can see your reaction right here. Okay, so that is good on 4 hours time frame. On 1 hour time frame, you can see the structure I was telling you. I'm looking at something like the 3-wave structure up, 3-wave structure down. This one coming to peak order at this particular demand level before you have another 3 waves up. Okay, so if we look at why am I favoring this particular demand zone, guys? This demand zone, I'm favoring this one. Okay, the reason is simple. You see that I will not expect gold to come to equal low with this and move to the upside, but I will suppose that it comes to break this low. Look at it right here. Coming this way, market coming this way, grab this liquidity, push up, correction, and upside. Once it gives you something like this, guys, just know that this move to the upside is going to come, and your TP will be right here. This stop is going to be taken. See this stop? The stop is going to be taken. Okay, TP here, And if you get to this level, guys, and you see a sharp reaction to the downside, then corrective structure there is your trade to the downside to bring this liquidity to the low. Is that okay, guys? Then what happens if you do not see a reaction at that level? Maybe at this level, you are beginning to see a consolidation again. It then mean that the liquidity is right here. If you come here, you see a reaction, then corrective structure, and then take a move to the downside. So the determination of the supply level that is very important is also determined by how you see reaction, by how market reacts at that level. If market does not react to show that it has peaked order, you don't need to bother yourself. Is that okay, guys? So that is it. Last but not the least, guys, is US 30. US 30. Okay, this is my supply level for US 30. I really want this market up here. All right, I want it up here, but right here, right now, it's coming there gradually. I miss my entry. This point, I miss my entry. Of course, you see this structure. Anytime this structure comes with a divergence, okay, it's telling you a story, and the story is simple. The story is telling you that it's going to make a move to the upside. Right here, market structure is taking. Okay, all you need is a correction, and it gave us the correction. Okay, it gave us the correction. Look at the move, break again. Okay, so we are not worried that we have missed the trade. Okay, we will see that this market will come down this way, back to this demand level, and then any move to break internal market structure, the correction is our trade to the upside. Where are we targeting, guys? We are targeting this supply zone, and from here we do not expect US 30 to go below, to go above this level. We watch for reaction at this level. When we see a reaction, corrective structure, we take our trade to the downside. So these are just the pairs I'm taking a look at for this week, and that's how I want to see the market. All right, so if you are, I'm going to make the video available on YouTube. I want you to subscribe to the channel if you have not done so, and press notification bell. I see you next time for another beautiful content. Bye for now. Bye. Thank you.
All right. Thank